The stock market is essentially a giant machine designed to separate fools from their money. But every now and then, it creates a loop so perfect that even the smartest people in the room forget how basic math works. Right now, NVIDIA is worth more than the entire stock market of Germany. Think about that for a second. One single company, which mostly makes high-end computer chips, is supposedly more valuable than the combined industrial might of Volkswagen, Siemens, Bayer, and every other German giant that has spent the last century building the modern world. This is not just a sign of growth, it is a sign of a financial fever dream. At the heart of this $2 trillion valuation is a single, massive promise that artificial intelligence will become the most profitable technology in human history. To fulfill that promise, NVIDIA entered into a handshake deal with OpenAI that was supposed to change the world. The numbers being thrown around were astronomical. $100 billion, 10 gigawatts of power, a supercomputer nicknamed Stargate that would theoretically be so powerful it could solve any problem known to man. It was the ultimate pitch for the ultimate hype cycle. But according to the latest reports from the Wall Street Journal, the golden boy of the chip industry is starting to backpedal. Jensen Huang, the man in the leather jacket who has become the face of this revolution, is looking at the bill for the Stargate project and is starting to realize that his best customer might be a ghost. This is the part of the story where the excitement of Silicon Valley meets the cold, hard reality of the balance sheet. You see, the relationship between NVIDIA and OpenAI is not a normal business relationship. In a healthy economy, a company makes a product, sells it for a profit, and uses that profit to buy equipment. But OpenAI does not have any profit. According to internal financial documents leaked to the New York Times, OpenAI is on track to lose $5 billion this year. They are not a business. They are a bonfire for venture capital cash. This creates a fundamental problem for NVIDIA. If your biggest customer is burning money instead of making it, you are not selling to a client. You are fueling an addiction. As user Jabe2402 noted in the comments, NVIDIA was essentially going to give them money just so OpenAI could give it back to them. This is the part where the math stops making sense for everyone except the people trying to pump the stock price. The disconnect between the Silicon Valley narrative and the actual economic utility of these tools has reached a breaking point. NVIDIA is starting to backpedal because they can see the edge of the cliff, even if Sam Altman is still pressing the gas pedal into the floorboards. They are realizing that a $2 trillion valuation built on a customer who loses $5 billion a year is not a sustainable business model. It is a $2 trillion hallucination. To truly understand why NVIDIA is reconsidering its relationship with OpenAI, you have to look at the accounting tricks that have kept this boom alive. In the world of high finance, we call this a circular investment, but you can just call it the infinite money loop. It works like this. NVIDIA, or its major venture capital partners, put billions of dollars into a startup, or a cloud provider, like CoreWeave or OpenAI. That startup then takes that exact same money and hands it right back to NVIDIA to buy chips. NVIDIA then records that money as revenue. Wall Street sees the revenue growth. The stock price jumps by 10%, and billions of dollars in new market cap are created out of thin air. It is a miracle of modern accounting. They have turned a $2 billion investment into $50 billion of shareholder value without a single real customer ever paying a cent for a finished product. Which, of course, is a polite way of saying the system is rigged. This is what many skeptics in the comments are calling a money laundering machine for the stock market. While that might be a bit hyperbolic, the underlying mechanics are not that far off. According to financial analysts at Barclays, a significant portion of the growth in the AI sector is driven by these circular investments. It is a feedback loop that creates a massive illusion of growth. It is the financial equivalent of trying to lift yourself up by pulling on your own shoelaces. It works for a while, especially when interest rates are low and everyone is desperate for the next big thing, but eventually, physics catches up with the hype. Jensen Huang is starting to sweat because this loop only works as long as the stock price keeps going up. If the market starts to question the actual utility of AI, or if investors realize that ChatGPT is mostly being used to write high school essays and bad poetry, the stock price stalls. When the stock price stalls, NVIDIA can no longer afford to subsidize its customers. When the customers lose their subsidies, they stop buying $40,000 chips. And when they stop buying chips, the revenue disappears instantly. The $100 billion deal with OpenAI was the ultimate expression of this loop. It was the largest bet ever placed on the idea that if you throw enough money and enough electricity at a large language model, it will eventually become so smart that it can solve the problem of its own bankruptcy. But as we are seeing with the recent delays, the math is not adding up. Even with the best chips in the world, OpenAI is struggling to find a killer app that people will pay for in large enough numbers to justify a $100 billion investment. Most of the value currently provided by AI is being commoditized by open source models. NVIDIA is realizing that they have built a mountain of silicon on a foundation of sand, and the tide is starting to come in. When we talk about the $100 billion Stargate project, we are not just talking about a lot of money. We are talking about a physical footprint that would rival a medium-sized city. To run the kind of AI models that Sam Altman dreams about, OpenAI needs 10 gigawatts of power. To put that in perspective, 10 gigawatts is enough electricity to power 8 million American homes. It is roughly equivalent to the entire power consumption of New York City on a hot summer day. This is the part of the AI revolution that the marketing department likes to ignore. Software is supposed to be light. It is supposed to be scalable. But AI is the heaviest software ever created. It requires massive data centers, cooling systems that consume millions of gallons of water, and a power grid that simply was not built to handle this kind of load. According to reports from the International Energy Agency, the electricity consumption of data centers could double by 2026. We are moving toward a future where we might have to choose between keeping the lights on in our hospitals or letting a chatbot hallucinate about poems written in the style of a pirate. This is the energy black hole, and it is one of the primary reasons NVIDIA is getting nervous. In a recent interview, Jensen Huang pointed out that the next generation of AI will require even more compute power, which means even more electricity. But where is that electricity going to come from? Building new power plants in the United States takes decades. Securing 10 gigawatts of green energy is practically impossible in the current regulatory environment. Even if you have the money, you cannot simply manifest 10 gigawatts of power out of thin air. When NVIDIA looks at the logistics of the Stargate project, they do not just see a high profit margin. They see a logistical nightmare that could take 10 years and $100 billion just to get the permits. For a company like NVIDIA, which lives and dies by its quarterly growth reports, a 10-year project with a massive failure risk is a terrifying prospect. Even the average viewer, like user It's Just Adrian, is starting to feel the pressure. They are looking at the headlines and realizing that these companies want the same amount of power as the largest city in America just to potentially automate away their jobs. It is a hard sell to the public, and it is an even harder sell to the utility companies that have to actually provide the power. NVIDIA has spent the last decade shifting from being a gaming company to being an infrastructure company. They used to care about the textures in a video game. Now they care about the capacity of high-voltage power lines. But by tying their fate so closely to OpenAI, they have entered a suicide pact with a company that has no clear path to profitability. Jensen Huang knows that if the power grid cannot sustain the AI boom, the demand for his chips will evaporate overnight. For decades, the foundation of NVIDIA's business was the gamer. The teenagers and enthusiasts who just wanted to play video games at high frame rates. But then came the crypto boom, followed immediately by the AI gold rush, and suddenly, the people who built NVIDIA's empire were pushed to the back of the line. This is what we call consumer cannibalization. NVIDIA has effectively sacrificed its most loyal customer base to serve a handful of tech giants that are currently burning through investor cash. According to supply chain data, the massive hoarding of high-bandwidth memory and DRAM for AI chips has caused prices to skyrocket across the entire electronics industry. This is not just about expensive graphics cards. It is about the price of laptops, smartphones, and even cars. As user Am Harbinger pointed out, you cannot promote AI if no one can afford the computers required to use it. The irony is staggering. NVIDIA and OpenAI are building the most advanced computers in history, but in doing so, they are making basic computing unaffordable for the average person. The logic from NVIDIA's boardroom is simple. Why sell a $500 graphics card to a gamer in Ohio when you can sell a $40,000 H100 chip to a data center in Virginia? From a short-term profit perspective, it is a brilliant move. But from a long-term brand perspective, it is a disaster. NVIDIA has abandoned the customers who stuck with them through the lean years to chase a client that does not actually have any money of its own. OpenAI is essentially a giant furnace. It takes in billions of dollars in venture capital and spits out impressive demos. But as every economist knows, you cannot run an economy on demos. You need revenue. And right now, The revenue generated by AI tools is a tiny fraction of the cost required to run them. According to estimates from Sequoia Capital, the AI industry needs to generate roughly $600 billion in revenue just to pay for the hardware that has already been purchased. Expecting a dozen different AI startups to reach that level of revenue simultaneously is not just optimistic, it is delusional. Jensen Huang is a smart man. He understands that the current price of his chips is unsustainable. He knows that the DRAM shortage is hurting the broader economy and creating a mass panic where companies are hoarding components they do not even need yet. Most importantly, he knows that when the bubble pops, the first people to get blamed will be the ones who sold the shovels. By backpedaling on the $100 billion OpenAI deal, NVIDIA is trying to diversify its risk. They are trying to find other customers who actually have a business model before they get dragged down by the sinking ship of the Stargate supercomputer. The Stargate project was supposed to be the crown jewel of the partnership between NVIDIA and OpenAI. It was marketed as a 5-phase plan to build the world's most powerful supercomputer, a machine that would lead us to artificial general intelligence. It was the kind of project that gets people excited about the future of humanity. But in the cold light of a balance sheet, Stargate looks less like a gateway to the future and more like a massive financial liability. According to reports from The Information, the project has been plagued by internal disagreements from the very beginning. NVIDIA wanted to control the entire software stack, while OpenAI wanted to build their own custom chips to reduce their dependence on NVIDIA. This is the classic frenemy dynamic of Silicon Valley. You need your partner today, but you are actively trying to destroy their business model tomorrow. This internal friction is a major reason why NVIDIA is backing away from the $100 billion commitment. Sam Altman has been traveling the world like a digital evangelist, trying to raise $7 trillion to reshape the global semiconductor industry. When you are asking for $7 trillion, you are basically admitting that you have lost touch with reality. That is more money than the entire value of the world's gold supply. It is more than the annual GDP of every country on Earth except for the United States and China. Jensen Huang is a pragmatist. He knows that $7 trillion is a fake number. He knows that the era of unlimited blank checks is coming to an end. NVIDIA's decision to pull back is a signal to the rest of the market. It is a signal that the adults are finally starting to look at the return on investment. Even the company that makes the most essential component of the AI revolution is saying, wait a minute, let's look at the math here. The impact of this backpedaling will be felt far beyond OpenAI. Every AI startup that was planning to use the NVIDIA loop to fund their growth is now looking at a much colder winter. As user Hiddly6019 said, the bubble is soon to pop. People have seen this cycle before, with the dot-com crash and the crypto winter. The pattern is always the same. Massive hype, followed by massive investment, followed by a sudden realization that the business model is just moving money around in a circle. NVIDIA is trying to land the plane softly. They are not cutting ties with OpenAI completely, but they are lowering their exposure. They are moving away from the all-in on OpenAI strategy and trying to find more stable, traditional enterprise customers who actually have cash flow. It is a classic move to de-risk a portfolio before the volatility hits. But for a company priced for perfection, even a small pullback can lead to a massive correction. One of the most destructive aspects of the current AI boom is something that rarely makes it into the mainstream news cycle, but it is felt by everyone who tries to buy a computer. We are talking about the mass hoarding of DRAM and high bandwidth memory. Because NVIDIA and its competitors are buying up every single scrap of memory they can find to build AI chips, they have created a supply shortage that has sent shockwaves through the entire global economy. This is not just a market correction, it is a panic. According to industry reports, major tech companies are now mass hoarding DRAM because they are terrified of being left behind. This creates a vicious cycle. The more they hoard, the higher the prices go. The higher the prices go, the more they hoard. This domino effect is a primary driver of the inflation we are seeing in the consumer electronics sector. It is a classic example of how a few massive companies can distort an entire global market to serve their own short-term interests. OpenAI is at the center of this storm. Their ambition requires so much freaking money and so much freaking hardware that the supply chain simply cannot keep up. When NVIDIA announced they were investing up to $100 billion in OpenAI, it sent a message to the market that the hoarding would continue indefinitely. But now that NVIDIA is backpedaling, that message is changing. If the biggest player in the game is starting to slow down, it means the supply shortage might finally start to ease. But for many consumers, the damage is already done. As noted in the transcript, OpenAI is arguably one of the most despised companies in the eyes of the public because they kickstarted this inflation and supply shortage. People are looking at their bank accounts and realizing that they are paying more for their technology because a startup in San Francisco wants to build a supercomputer that might never work. Jensen Huang knows that being associated with this kind of economic distortion is a long-term risk for NVIDIA's brand. They do not want to be the company that made computers unaffordable for the average person. They want to be the company that powered the future. By distancing themselves from the Stargate project and the most extreme demands of OpenAI, NVIDIA is trying to regain some level of control over their supply chain and their public image. They are realizing that being the sole provider for a global bubble is a dangerous place to be when that bubble finally starts to leak air. So, what does an exit strategy look like for a company that is currently at the top of the world? For NVIDIA, it means moving away from the high-risk, high-reward world of AI startups and trying to find more stable ground. They are looking to diversify their customer base into sectors that have actual, proven business models. We are talking about healthcare, where AI can be used for drug discovery. We are talking about the automotive industry, where AI can power autonomous driving. We are talking about heavy industry and logistics. These are customers who have real cash flow. They have real problems that need to be solved, and they are not relying on venture capital to pay their NVIDIA bills. This transition is essential for NVIDIA's survival. If they remain 90% dependent on the AI hype cycle, they will crash just as hard as the startups they are fueling. The backpedaling on the OpenAI deal is the first step in this transition. It is NVIDIA saying that they are no longer willing to be the primary bank for the AI revolution. They want to be the supplier, not the financier. This is a subtle but massive shift in the power dynamic of Silicon Valley. For the last 2 years, Sam Altman has been the one setting the pace. Now, Jensen Huang is the one calling for a timeout. But this pivot is not without its own risks. As NVIDIA pulls back, they create an opening for their competitors. AMD and Intel are waiting in the wings, ready to offer cheaper, more accessible hardware to the customers that NVIDIA is starting to ignore. Furthermore, the giant cloud providers like Amazon, Google, and Microsoft are all building their own custom AI chips to reduce their dependence on NVIDIA. NVIDIA is in a race against time. They need to find a way to normalize their business before their monopoly is broken by either a market crash or a technological shift. The decision to scale back the Stargate project is a calculated move to preserve capital and focus on more reliable projects. It is a sign that the era of the blank check is over. As user Caboose00F76 pointed out, many people are hoping this bubble pops just so the market returns to some level of sanity. NVIDIA is trying to find that sanity before the market forces it upon them. They are trying to land the plane while it is still flying, which is a lot harder than it sounds when you are traveling at $2 trillion an hour. In the end, the story of NVIDIA and OpenAI is a story about the limits of human greed and the laws of economics. You can ignore those laws for a while, especially if you have a revolutionary technology and a charismatic leader. You can ignore the cost of electricity, the scarcity of materials, and the total lack of a business model as long as the stock price is going up and the loop is spinning. But eventually, the loop runs out of momentum. Eventually, someone asks to see the actual profits. NVIDIA is backpedaling because they have realized that they are holding a $100 billion ticket to a show that might never actually start. The gamers were the first to see it. The engineers were the second. And now, the accountants are finally weighing in. The AI revolution is a real technological shift, but the AI bubble is a financial choice. We chose to value companies at hundreds of billions of dollars before they had a single dollar of profit. We chose to ignore the fact that the national grid cannot handle the power requirements of these machines. As we move into 2025 and beyond, the narrative will shift from what can AI do to how much does AI cost. And for many companies, the answer to that question will be their undoing. NVIDIA will likely survive because they have the best hardware in the world. They will return to being a very successful chip company instead of a $2 trillion financial anomaly. But the version of NVIDIA that we have seen over the last 2 years, the one that seemed invincible and capable of infinite growth, that version is coming to an end. The infinite money loop is closing, the music is stopping, and Jensen Huang is making sure he has a chair before the silence begins. For everyone else, from the gamers who just want a new graphics card to the taxpayers who will eventually pay for the energy grid upgrades, the bill is finally coming due. And it is a lot more than $100 billion. The dream of a digital god was expensive, but the reality of a broken business model is even costlier. As user Asian Shadowrunner joked, Skynet might be delayed for now, but the real delay is not in the technology, it is in the economics. We might have the talent to build amazing AI, and we certainly have the chips, but we do not have an infinite supply of cheap money or cheap electricity. NVIDIA is the first major player to admit this, but they certainly won't be the last. Thanks for watching, and remember, in a world of infinite hype, the only thing that is actually scarce is common sense. If you want to understand where the money is really going, you have to look past the leather jackets and the $7 trillion promises and look at the power bill. Because at the end of the day, someone has to pay for the electricity, and right now, the math just doesn't add up.